All right, Heidi, we're going to talk about slowdown, but this one not globally, but China. Weak data from that country. Factory activity in China contracted to a 3-year low. Export orders falling at the fastest pace since the financial crisis. Andy, you follow China quite a bit. How do you read these numbers? Because so much of the data that comes out of China is skewed sometimes by the government. This isn't necessarily government data, though.
That's right. And, but yeah, first caveat always with numbers from China, it's opaque, people, right? And even with these kinds of numbers, it's not good. The trend is not so great. But if you look at that chart that we had up earlier, you can see that it does match what we saw in 2016. So, yeah, I guess the point is that this is an economy that, fluctuates like any economy. There's cycles. There are questions, though, of course, about how much the trade war with the United States is impacting the economy there. And once it's resolved, if it's resolved, will this just be an instant stimulus for the economy? A. B, can the government just also spend its way and fix this on its own doing, which they've shown the capacity to do that before. And I think that there's so many balls in the air for Xi Jinping and his advisors that it's a very tricky time. I
mean, when you look at those Chinese numbers coupled with the U.S. GDP number, which yes, it beat estimates, but it still represents this narrative of slowing global growth, right, Mike? I mean, that's kind of the bottom line here.
It is, but I mean, if you look at what we printed U.S. GDP last year, I think any economist here in the U.S. would take it. And that's with, if you remember the fourth quarter, we went through a major market sell-off in the fourth quarter, correction, if you will. So I think last year is fine and out of the way. The concern is going forward into this year. And I think if you look at China, is this a result of the trade war? Is this a result of an aging population or a changing population? Not really sure. But clearly there's going to be a global slowdown at this point. But is the U.S. doing enough to overcome that? I think that the jury's still out on that.
To follow that, though, you have to look bigger than just China. We know that Germany is barely growing. We know Italy is already in contraction. So from an investment standpoint, trying to time when the recession might come to the United States, we see slowdown, slowdown, slowdown. Is now the time to be cautious and maybe take some profit off the table?
Possibly, but I think really the question is the U.S. going to lead the recovery in global growth, or is the U.S. going to be dragged down by the global slowdown? I would say from anyone watching at home who's looking to invest, when you get a 20% drawdown in the stock market like you saw up until Christmas Eve, great time to put money to work. When you rally and go straight up for 10 weeks, I wouldn't necessarily be pulling money out from under the mattress and putting it to work right now if you didn't in the last 10 weeks.
And this sort of has been coming and going for the past couple of years, the concerns about the recession. Yep. And then what happens is a lot of times, Mike, you'll see like yield stocks rally on those kinds of reports and that kind of sentiment and that kind of thinking. So it is a tricky time. I mean, it's always difficult out there, but I think, right now in particular, as people are so focused on, I'm going to get this right and call the next recession perfectly. And it's the kind of thing that has me thinking that if everyone thinks this, it's such a consensus right now that we are watching as we slowly get to this point that maybe it's not the case.
Although
I don't know what
some of those recession calls are getting pushed back or coming off the table entirely.